There is a version of this story that writes cleanly. Palantir builds software for the Pentagon has money. AI is the future of warfare. Therefore, Palantir wins. That narrative has been remarkably durable. While NVIDIA traded down to S&P 500 parity for the first time in over a decade, the most valuable company in the world suddenly assigned no growth premium at all, Palantir held its altitude. That divergence is worth sitting with for a moment. Goldman Sachs noted that NVIDIA's forward price-to-earnings ratio fell to match the broader index, ending a 13-year streak of premium valuation. Analysts still project NVIDIA's earnings to grow more than 70% in its current fiscal year, and the company is expected to account for roughly 21% of total S&P 500 earnings growth in 2026. The market shrugged. War risk in the Middle East, concerns about AI spending sustainability, and a broader rotation compressed the multiple anyway. Palantir did not get that memo, and that asymmetry is the first tension worth unpacking. The bull case for Palantir rests on a specific structural argument, that AI is now a war-fighting requirement, not a procurement experiment. The company's Gotham platform is embedded in battlefield logistics, targeting, and intelligence fusion. Its Maven smart system was part of the Air Force's AI targeting work. These are not pilot programs. They are operational deployments with renewal cycles attached. That is the consensus view. It is not wrong, but it is incomplete. Here is what gets less attention. Defense budgets operate on continuing resolutions and multi-year authorization cycles. The current fiscal environment in Washington is not one of open-ended expansion. There are active debates about top-line defense spending, with some factions pushing cuts to non-kinetic programs, which is precisely where AI software sits. Palantir's contracts are real. The question is whether the renewal pipeline is as predictable as the valuation implies. The company has also been aggressive in its commercial expansion, pointing to Palantir's AI platform, or AIP, as the growth engine beyond government. Commercial revenue has been growing, but commercial AI software competes in a market where Amazon, Microsoft, and Google are not standing still. AWS alone is pouring roughly $200 billion into AI and cloud infrastructure by its own disclosure, and it lost a key chip executive from Annapurna Labs mid-cycle, which signals internal stress at exactly the wrong moment. The commercial channel Palantir is targeting runs directly through these same hyperscalers. Here is the piece most analysis skips over entirely. Palantir's real moat is not its software. It is its data architecture inside classified environments. This distinction matters enormously. Commercial AI companies, NVIDIA, Amazon, Google, cannot simply outspend their way into the classified stack. There are CWEF requirements, FedRAMP authorizations, and clearance-gated personnel constraints that create barriers no amount of capital expenditure resolves on a short timeline. This is structurally different from a typical software mode. It is not network effects. It is not switching costs in the conventional sense. It is sovereign data custody. Once a military or intelligence agency builds workflows on top of Palantir's ontology inside a classified environment, the migration cost is not financial, it is operational. Ripping out the data layer during an active conflict or intelligence cycle is not something procurement officers approve lightly. That is the argument most analysts summarize without really interrogating, and it is also where the risk concentrates because it cuts both ways. Sovereign lock-in means Palantir wins big when geopolitical threat levels are elevated and defense budgets are prioritized. It also means Palantir has very limited ability to pivot if that threat environment shifts or if a new administration decides AI targeting software carries political risk.
Jensen Huang's claim that AGI has already been achieved, offered on a podcast against a definition of building a billion-dollar company, actually points at something real here. The definition of what AI can do in a defense context is genuinely contested. Google DeepMind published a cognitive framework identifying 10 faculties required for general intelligence, noting that current AI has a jagged profile, superhuman in some areas, below average in others. Warfare requires judgment under uncertainty, social cognition, and adaptive learning, 3 of the areas where current AI lags most. Palantir is pricing in a version of AI that may still be years away from reliable autonomous operation. The bear path does not require a catastrophic breakdown. It only requires one of 3 conditions: a continuing resolution that freezes discretionary AI spending, a commercial win rate below what AIP growth figures imply, or a single high-profile operational failure of AI-assisted targeting that triggers congressional scrutiny. Any one of these compresses the multiple without touching the underlying business quality. The Iran war context is relevant here, though not in the way most coverage presents it. IRGC threats against American tech companies, including Tesla and NVIDIA, are primarily psychological and financial in effect. Tesla's direct Middle East exposure is minimal, limited to showrooms and service centers in the UAE and surrounding markets. But the geopolitical temperature that those threats reflect is the same temperature that keeps defense budgets elevated. Palantir is, in a real sense, a long position on sustained geopolitical instability. That is not an accusation, it is a structural observation. The recovery path is more interesting than the risk path. NVIDIA's NVLink Fusion expansion, including the $2 billion investment in Marvel announced this week, is quietly building exactly the kind of open AI ecosystem that Palantir needs for its enterprise and government deployments to scale. NVIDIA's networking revenue reached nearly $11 billion in its most recent quarter, up 263%